All right, let's get this thing fired up here. All right, you guys can hear me, right? A couple of you guys just
Yeah.
give it a one. All right, looks like we're good.
All right, gonna push this thing out to the water, and then I will be right back.
Yep, give it another minute here. It's currently 2:29. If this thing fills up, let people know that they can just watch it on Twitter. I think it's on YouTube as well, possibly. I'm not sure if we'll fill up or not. Apologies for not being able to get the old space working. All right, it is that time. Let's get started with this week's stream. Thank you all for coming out. As always, nothing is financial advice. Everything here is strictly for educational, entertainment, and informational purposes. Feel free to shout out a ticker, a contract, a question. Let me know what news you're hearing, and we will go on our merry way. I'm reading the Discord chat only. Nick will relay any Twitter comments, I believe. So, yep. All right, let's see here in the chat. Someone's saying Intel. So, speaking of Intel, do we have anything going on today? There was one contract that I do want to just check the open interest on tomorrow. Let me see here. I wonder why my bookmarks don't show up here. Very interesting. Give me 1 second to pull it up. Intel, I think it was the February something or other. February 220. So they're trading 11,000-ish volume on the 45 strike calls expiring in February. There is 6,000 volume here. So, it's not super clear when they're opening and when they're closing potentially. So we'll have to check open interest tomorrow. This is the one Intel contract that I saw. Is there anything else Intel that stands out? So what kind of filters might you want to use if you were just trying to generally look at a ticker? You type in Intel in the search bar, you get all these contracts, but like what more can we look at? Sorting by volume isn't necessarily the best thing because we're trying to find opening trades, and just merely sorting by volume doesn't help us out there. So when thinking about opening trades, obviously the volume to open interest ratio is like the key thing that we want to look at. So generally speaking, I think a volume is greater than open interest filter. It's just something you should never leave home without. What other things might we want to look for if we're searching for flow? And this doesn't necessarily just apply to Intel, it can apply to anything. Let's just look at stocks and ADRs. So we're looking for all option contract today for stocks and ADRs in which there is more volume than open interest. Those are the only filters that we've input so far. If we wanted to look up, let's just say, buying activity, we would generally go with ask side activity, right? If you guys are new, you won't have heard me give the spiel that not everything at the ask is a buy, not everything at the bid is a sell. But we have to start somewhere with the scanner. So let's just say, show me all contracts now that are trading at least 70% of their volume is at or closer to the ask. So that whittles it down quite a bit. And let's see here. We can just start clicking around. There's a couple things that I do want to, a couple more filters I want to add, but I can bring this up kind of naturally as we talk here. So you see the contract snap. It might be pretty compelling at first, right? We have 100,000 contracts traded. So today's obviously December 4th. 100,000 contracts traded. There's only 30,000 open interest. Now I'm saying only 30,000 interest. 30,000 is a big number, but relative to 100,000, it's not so big. So, when you see a 100,000 size trade come in against only 30,000 open interest, that's an opening trade. Now there is one thing to note here, right? This thing checks a lot of boxes. It's an opening trade. Every contract that was traded today was traded at or closer to the ask. It is close to 4 million premiums. It is bouncing coincidentally right where this trade allegedly took place. But there is one thing to note, all 100% of the volume today is attached to another trade or stock. So we need to actually just look a little bit further into what is going on here. So we see at 225.27, two executions of 50,000 each, so 100,000 size trade. At the same time, with the trade code MLFT, when there's a prefix ML that stands for multi-leg, we highlight that here in the feed by writing ML. There's also this little icon. You can click on the icon or the MLO to pull up potentially related trades. So what do we see here? We see that this trade was very likely transacted with some 13 strike calls expiring in June. So remember, we started with the 10C March, which we determined was an opening trade based strictly on the volume and open interest. Now, if we look at this contract that this is attached with, we see that we cannot immediately determine that this is an opening trade due to the high amount of open interest relative to the volume. I'm just going to guess that this is some kind of roll. Excuse me. If we zoom out a little bit on the data, if we go back a little bit to see that, in the chart, I think it could potentially give us a little bit more context. Can we go out a little bit further? So if we go out to like the very stretch of the data, it would appear that on August 6th, potentially the start of this trade here. So let me go back here. So the 13C that we're looking at, this new trade here that's sending on this wild goose chase here. So yeah, I mean, August 6th, over 100,000 volume. So that could be this 100,000 size that we're looking at plus some stragglers. That was the start of the trade. Now, it's looking a little bit less compelling, right? Like, we saw this first huge trade of 4 million premium that sent the net premium and the stock, going up at the same time. But it would appear that this is just some kind of reposition in which they're losing money, right? So this is the 10C is the new position. The 13C June was the old one. It was opened at 63, closed at 39, so it's 29 less than it was open for. Was this also a multi-leg trade in its own right when opened? No, so this was opened, this is a roll down and closer in expiration, which is just kind of strange. But yeah, context, added context. There's more than meets the eye than just, hey, there's 100,000 contracts of this snap traded, right? It's also attached to this other trade, which didn't do too hot. So you got to think about that. And there's quite a lot of rolls when you look around here. That one we just happened to look into, which is a good way to bring in, right? Let's get back to thinking about filters. You may or may not want to limit the percentage of multi-leg activity that you see. Now, these are all, whatever numbers that I plug in from here on out, there's no best number. They're just arbitrary. You got to tweak them as you see fit. Let's cap this at 10% of all volume can be attached to a multi-leg trade. Premium, right? I don't want to see contracts that are, what's like the minimum. Now, there's been flows that are like $1,000, $25,000, small flows that are probably someone who knew, based on, a little 2020 hindsight look at what happened. But, we can't look at every contract under the sun. So I think 100K total traded on the contract is okay. There's some other stuff I'm sure we could put in, but let's just click around and see. There's the Neo calls that I posted on Twitter earlier. There's been 55K of these traded just all day. Now, there's no way to know at which point they're being opened or closed, right? We don't have the luxury of the snap trade where it was a single 100,000 size candle. So we know that is the clear opener, right? We just have a spattering of volume all day. Now they're probably opening most of these. Open interest is probably going to be 40,000, 50,000. We'll see tomorrow. This one's one I'll post on my daily open interest post on Twitter. Give me a second to have a sip of water here. Gap. Let me actually post a link to this screener in the chat. I'm posting it into the Discord chat. Now, just because it's on the screener doesn't mean it's. Don't read this as oh, Neo 5C May 55,000 contracts bought. That's not it. It's 55,000 contracts traded, 80% of which were traded at or closer to the ask. Ask volume is not necessarily a buy, as I mentioned a little bit ago, nor is bid volume necessarily a sell. So Gap, the 28 strike monthly saw a pretty big opener. Again, how do we know this is an opener? It's 16,000 volume. Let me move my mouse up here. So if you look to the left of my mouse, it says candle volume, 16,626. And then we have, very little open interest, 1,500 give or take. So a clear opener here. Now, are the rest of these openers as well? Who knows? Check open interest tomorrow if you're still interested. So not an earnings trade. Gap, I guess, recently reported earnings. Some of the retail, clothing seems like it's been doing pretty well lately. This one's one that I know some of you guys saw in the Discord. Pretty much zero open interest. So when they start trading, 500, 6,000 size, 9,000 size, it's a pretty clear opener. I was skeptical because it was like, 10 cents. I saw it in the moment, but like I didn't really think anything of it. I know some of you guys saw this and hopped on. So good on you. Open, another pretty clear opener at some point in the day. There's 6,000 open interest. How much the volume here? At this point in the day, the volume is 13,000. I'll move my mouse up to it right here. So to the right, daily volume, 13,000. So, 13,000 contracts traded at the ask, all single leg. Openers for certain at some point here. Peace guy, 5,000 open interest. When you see a 10,000 size trade, that is single leg. There's nothing really else to look at. There's some kind of opener. Now, what I'm not doing when I'm clicking through these, I'm looking at the chart only. I'm not looking at the options tape, which is something that we should do. We'll do that at many points in this stream. But, going back to what I've said now a couple times, if not everything at the ask is a buy and not everything at the bid is a sell, then we can't trust the charts, right? We can't trust the bid ask bars. We can't trust necessarily net premium charting or, market tide charting. All of these are just assumptions. If something is at the ask, you just, what do you do? What are you going to do? You have to at some point, make some compromises. So we just assume stuff at the ask is a buy until proven otherwise. And by proven otherwise, I mean, look at the actual flow feed and see for yourself, what the transactions look like. All right, went on a little tangent there, but let me scroll back in the chat here. So yeah, filters. I mean, I guess it wasn't a tangent. It's just thinking about filters. Think about opening flow. It's just this one switch did quite a bit for us, right? Like if I get rid of this switch, I guess we still actually have pretty good stuff going on. But use the switch. Just use it. Trust me. All right. Now, here's an example. So, it's not always just because something has more volume than open interest does not necessarily make it an opening trade, though. So, this one that has 8,000 volume, yes, 8,000 is more than 7,600. And actually, in this case, it probably is like just a single stick or two. Let me see. Okay, so it's a couple. So this one, okay, actually, this is not a bad example. You don't know at what point, if any, they're opening these contracts necessarily, because there's 7,600 open interest. A 1,000 size candle, is obviously much smaller than 7,600, so that could easily be a closing trade. This trade of 3,000 could also easily be a closing trade. So you have to think about the numbers. Just think about what fits into what number, what doesn't, stuff like that. All right, so we said Intel. Let me pull up the next contract we've been shouted out here. We got the IMO 95P. Is that the one? All right, so this one, again, this one I think was on the scanner that we just had. Let me go back here. Yeah, RIMO right there. And it just fits the characteristics that we're looking for, right? More volume than open interest, 70% or more of activity at the ask, very little multi-leg percentage. Now, again, this isn't necessarily a bad thing, right? If you see, you could see like, spreads are can sometimes be easy to read if they're both opening, if both legs are opening. Rolls can be fairly easy to read if you see the historical, like we did with the snap, right? We saw the start of the snap trade, the close, but this one appears to be single leg. Has a lot of good characteristics. What does the actual tape look like? Okay, so this is actually every trade of the day for this specific contract. How do I know it's every trade of the day? It's because if I look at the very bottom part of the feed, I can see that the very first trade, or the very bottommost trade, was 13 size, and after this trade of 13 size, the volume for this contract was 13. So this is clearly the first trade. Now there's a trade of size 6. 6 plus 13 is 19. 6 plus 19 is 25, et cetera, et cetera, et cetera. But now you look here, you see that the timestamps are all the same. So this, I guess trade is not really the right word I want to use. When each line of data is best described as an execution at a different exchange, right? So you have an exchange column here, which you can turn on and off along with other columns. It's not necessary. You don't need this column, honestly. I don't know why I have it, but there's different stock exchanges. There's the XCBO, there's the EDGO, all these. You don't need to know any of them really. It doesn't matter. But this trade, there wasn't enough liquidity at any single exchange, so it actually took. It went through a whole bunch. Now, so there are some repeating names, like these different market makers at this exchange were able to do this much. The XCBO guys did this much. There might be some more up here, but anyways, this 103721 timestamp is full of different lines of data, aka executions, right? So executions make up a trade, is how you want to think about it, right? So I think this 103729 is a trade. Think of this as the trade. It was a trade of exactly 10,000. How do we know that? Again, every trade of the day here. So the size adds up, the volume adds up. It's in reverse chronological order, 10,000. So someone opened 10,000 contracts, or someone executed 10,000 contracts in one go against one open interest. So clearly an opening trade. And look at how the bid and the ask and the spot price relate to each other during this execution, right? So this trade was made up of however many executions this is. It's whatever, 1, 2, 3, 4, 5. I'm not going to count all of them, but whatever this is. So all of these different executions were one trade. And you can see it starts filling at 310, right? So the market makers are like, all right, this is worth 310, 310. The bid at, it's a wide spread, so the liquidity is not great. But you can start to see here at the end when there's no more liquidity and the market makers have to, they're still making a market. So this stuff is filling quote unquote like above the ask, but the ask is being set by like the demand, right? So this is probably a buy. This is like a fairly clear buy because of the way the bid ask is interacting with each other, right? So there's no more 310 asks. So now the market makers are selling at 320, 330, but this all took place at the same time in the same trade most likely. How do I know it's most likely? Like how many? It's just so it's there. There's 10,000 contracts traded in the same millisecond, pretty much, right? Let's all just use our common sense and understand that it's one person just hitting the buy button, right? Swept as well. And then all this activity after, I guess, is potentially people tagging. Now, you don't know, just because this is a clear buy doesn't mean that, whatever this IMO is going to tank. What is this? It's at the money. What is it? It is I have no idea. Energy something, Imperial Oil. So there's more stuff going on than just flow, right? I mean, could be a hedge because, oil is always in the headlines. If it is oil, energy, whatever. Yeah, I mean, it is oil, pure oil. Oil is always in the headline. So don't, could be a hedge, could be a long position, could be whatever. I mean, it's definitely a buy, but we don't know if it's like a buy and with the, I think oil is going to go down, or I'm just protecting a much larger position. Who knows? But yeah, this is a clear buy, I would say. It's a good share, good chance to look at the tape and see how it's filling quote unquote above the ask. It's not really above the ask. It's just like creating a new ask. I mean, I don't know. It depends on how you want to look at it, I guess. All right, moving on. We got the coin 280C 116. So let me just zoom out here. So coin, at a quick glance, again, this was yesterday's activity, so we have to go back into this little table here. So December 3rd, yesterday, December 3rd, we had a very big single size candle against no open interest, so a clear opener. There is one thing to note, this is a multi-leg trade, and actually, this ETF actually owns, this is the ETF's position, whatever this Coney ETF is. Give me 1 second to pull it up on the other screen. I just don't want to dox myself like I've been doing. Coney ETF. Yield Max Coin Option Income Strategy ETF. So this ETF, this actually might be a short call position. Let me see here. Does this fund post their positions? They do. Give me 1 second. All right. I'm going to post this in the chat. If I click this, does it open in this window? No. What if I do this? There we go. All right. So I'm at the YieldMax ETF website. What was this one again? This was the freaking Coin 280 January 2026. So again, we're on the CONY ETF's homepage. It is a YieldMax product. You guys may or may not have heard of them. But if we go down to this holdings for this CONY, do they have, maybe they didn't update. Here it is. So Coinbase, exactly that. So the 280 strike, January 26th, 16th, right? So 2026, January the 16th, call 280. So they have, are they short this? Are they long this? I don't know. They don't really. So the thing that I don't understand about this is that it's an income strategy ETF, but I don't understand how they have no short position. Like, where is the income being generated? Is it from the T-bills or what? I have no idea. But anyways, this is actually like the first time I've like come across this, or it's been like just in passing, right? I've always looked for something like this, but yeah, though this entire flow, I guess, is probably not actually flow. It's this ETF's position, and it's an options income ETF. So they're always going to be having some kind of position no matter what. Like, that's the strategy. So there's some flow that isn't really flow. Like, for example, I don't remember what this, give me a second to pull up my other screen here. QYLD ETF, QYLD ETF. QLD ETF. What is their short position? Their short position is the NDX December, what is it, the 18? 19. I'm talking a mile a minute like I just took some uppers, but I promise it didn't. I don't know why I'm talking so fast. 23950. 23590. 235. 235. What am I doing? NDX. Call 235. I can just sort by open interest, can't I? I can. Here it is. All right, so why do we not have it there? Is that this? That's not the right one. 223. Here it is. Okay. So going back to before I started blabbing. So sometimes flow isn't actually flow, right? So now you're looking at this chart. Let's go back to so you see the chart, it's just straight, pretty much green candles for the most part. You know, there's some bid side activity, some mid, but for the most part, it's at side activity. So zoom out one more here. So it's 0% multi-leg. So it's all single leg activity, but this is actually a short position. So, and this ETF does this every month. So like this is, if you didn't know that, and you like, so this is what the net premium looked like because of this chart or because of this activity. But it's not actually bullish flow, and it going up in a straight line since it was opened is just strictly coincidental. So like, I'll drop the link to this one in the chat, and we can look at it as well. So this one is the QYLD. It is a NASDAQ 100 covered call ETF. Every month they short a NDX call, and every month they close it the day prior to expiration, and on this date they will open a new one. So on December 18th, this position will be closed. I bet you $1 jillion. And then on December 19th, the January expiration position will be opened. So yeah, you can check me on that. You don't actually have to pay me because I know I'm right. So there's sometimes just huge activity, right? This was how much premium? I have to get rid of some of these columns to see the premium here. All right, so this is 400 million in premiums, all opened on this contract, but it's not actually bullish. It's just a position that will always exist. So that's just something to keep in mind. So yeah, I mean, this little feature. If there is an ETF that we have the data for, right? This is not an exhaustive list, but this specific contract actually has 3 different ETFs that we know of that are short positions. So that's cool. All right, let's go back to the chat. So yeah, coin, probably not actually flow. Looks to be some kind of part of just like an income option position. So there's no directional strategy for that one. All right, moving on. We got the PGY January expiration 26 strike calls. We can see that right here, right? If we're on the contract lookup page and I just hit the search bar on PGY, it'll just pull up all the options, and I can sort it how I want. In this case, volume, I can just see that the one with the most volume just happens to be the one that we want to look at here. And from here, I can also see pretty much mostly what I want to see. I want to see what the volume to open interest ratio is, right? This is wide enough that it's probably an opener, and we'll take a look at the chart. Predominantly volume is at the ask. Just times where I want to see stuff that's being shorted, right? If you follow me on Twitter, I talk about short puts all the time, sold to open puts, written puts, however you want to call it, cash secured puts, CSPs, right? The names are endless. But in this case, so $250,000 in premiums traded. So this one has some, it's ticking off the boxes, right? And we'll check it out. PGY is this? Okay, never mind. I thought it was something else. All right, so when we look at the chart, we see 1,000 size candle against 227 open interest, right? So clear opener. Let's take a look at the tape and see what we see. Again, in this case, so there's so few transactions that we can see every trade of the day. Again, the first trade of the day was size 1. Now there's another trade of size 1, which brings the volume to 2, and then another one, which brings it to 3, and then there's a 78, et cetera, et cetera. So again, let's look at the timestamps here. We see the 10/27/57 timestamp, which has the first is just 1,000. Yeah, exactly 1,000. Now the tape doesn't really tell you that much in this situation. It does bounce around a little bit, but you never see it really move. You don't see the bid ask moving. So there's not really a whole lot of it does move up here, but I'm not really sure. It is an opener, no doubt, right? The name of the game is to at least find stuff that is 100% being opened. So that eliminates a lot of the guessing that we have to do. But this one's not as clear as the other one. What was the other one? IMO. As far as like clear a buy, IMO was the best. This one is an opener for sure, but I'm not sure about anything more than that. All right. Let me see here. All right. A couple more in the Discord, and we'll get to some Twitter ones here. We got still half an hour. I can stay a little bit longer as well. Poet 6.5, see the monthly clear opener to, or not clear opener. Yesterday was a clear opener, right? 287 volume. We see a 2,000-ish size trade, which resulted in more open interest. There's more volume today, so potentially an ad. Check open interest tomorrow, for sure. All right, someone is asking for HIMS. Let's see here. Let's just take a look at the HIMS net premium. So HIMS just on a straight heater today. Was there anything? Oh, geez. I want to see. Let's take a look at yesterday's flow and see what some of these bumps were. So how can I look at yesterday's flow? I'm going to go to the options screener, which shows me every contract traded, and I'm going to go to HIMS. I'm going to change the date to yesterday. Let's see. So the very first one that we see here is the HIMS 41 March call. More volume than open interest, great. No multi-leg activity, so in 2.5 million premium. So I mean, this was certainly one of the things that moved it. I'm gonna guess this 37 January is one as well, and same with this 80 strike 2027, which is just kind of a funny high ass number. But anyways, so I'm gonna click on this one. I'm gonna click on this one. I'm gonna click on this one, and we probably will see a corresponding jump in the net premium at the time of the trade. So this one, let's go back to yesterday's chart. So this one was at 10.50 to 11, which was this one right here. So that's that. So let's just pretend that we saw it yesterday, right? So let's pretend like you're looking at yesterday. Yesterday was December 3rd. So yesterday, December 3rd, you see 5,000 volume against pretty much no open interest. You know it's an opening trade, single activity, big premium. And then this morning, if you checked open interest, you would have seen that it went up as you would have expected because there's no other volume throughout the day for it to have not gone up. What does the volume today look like? Okay, so there is 1,000 volume today, but there's like nothing really interesting to speak of, right? If this whale is clearly still in, you would have had to have seen at least, 4,000 volume for this whale or trader to have gotten out. So that's the first candle. That's this first one right here. Let's see if we can't find some of the other ones. So the 37 January as well. Sorry, my computer sometimes lags. So this one was at the end of the day, a 2,400 size trade, which resulted in an increase in open interest as you might expect. Now the open interest doesn't go up by 2,400, but that's a story maybe we'll get into another time because we're running out of time here. But this one was at the end of the day at the 320 to 330. And that is this one right here. What about this one? What time was this one? This one was at 120, which was like this one right here. Okay, so I mean, we found the culprits. We found the culprits for the spikes. What about today? Oops, I didn't mean to click that. HIMS today, December 4. So they're not sticking out to me as easily. So let's just like filter some stuff a little bit. So just show me calls because I know that we're looking for spikes and calls. Show me contracts that have traded at least 100K in premium. I guess that's
I know you're gonna hate it, Snorlax,
yeah.
but for the Twitter viewers, you're gonna have to zoom in like we do on Whale Watch, so the people on mobile can see.
All right, sure. Let's see. Are there any contracts that are just like mostly at the ask that have a lot of premiums? So this 37 weekly might actually be one of the ones for today. So I mean, there was a 1,000 size candle-ish, but there is 3,000 open interest, so it's not clear if this is an opener. So probably today's activity. Oops, how do I get there? Today's activity is just not as clear as yesterday. So like yesterday had some like pretty clear HIMS openers, but today not so much. Maybe this one actually. Nope. All right, yeah, HIMS. I saw someone chatting that there was some news. Did I misread that? Let me see here. Hims acquires Canadian telehealth. Live well. I see that someone said that in the chat. Someone also said a lot of Hims flow yesterday on the 320.41. Let me see. Did we see that one? Hims 41C 320. Yep, that's that. That's one of the ones that we talked about for sure. Good eye, good eye. All right, let's get back here. X request, HTZ. Let's take a look at the Hertz. Hertz. So we're looking at all contracts for Hertz. Now I see a very big volume blob here. These are all probably related. Now you might see that there's somehow 149% of all volume for this contract was multi-legged, and that's obviously impossible, right? This can only be 100%. Now, the reason why this is here is because some of this volume was probably canceled and or modified, if I had to guess. Same with this one and this one. Let's take a look. This flow, I think you can just ignore. It is some kind of roll. We'll take a look at the tape, but I would just ignore it. So yeah, all of these, so the 9C January, the 9P January, the 9C December, the 9P December, all being traded at the same time. Let's see here. If you just look at the relationship between the volume and the open interest, you know, or you don't know, but you can assume. Well, actually, you can't really assume. I mean, so this is these. Okay, so actually, yeah, the January positions are clearly being opened, right? So we have, whatever the volume is, we'll take a look at the tape, but there's significantly more volume than open interest on both of these. In these instances, it's not as clear. Now, it says 78,000 volume here, but the candle is only 50,000. I think if I look at the tape, we're going to see a trade that's been struck out in red. And I'll explain a little bit what that is. So let's get to that here. All right, so this is actually every single trade for this contract for today. So it's just 3 different executions, right? Remember we started at the beginning, each line we can think of as an execution. Probably the same trader, right? I mean, like there's only a couple people that are going to be trading this size. But we can see here at the top, this very last one has a strikeout, a red line through it. If you hover over this thing right here, if I zoom in, does it get bigger? It does. All right, so the symbol. Trades that are struck out have been canceled or modified. Trades can be modified or nullified for the maintenance of a fair and orderly market per the SEC. Periods of high volume may result in system disruptions and malfunctions that may lead to trades being incorrectly reported and requiring modification/nullification after the fact. This is a normal occurrence. So the explain like I'm 5 for that is there's somehow in this day and age of high frequency trading and all that mumbo jumbo, they still, there's people still fat finger trades. People still put in the wrong price for trades. So in those situations, the market will either reverse the trade or they'll fix they'll fix the error. Now in this case, this took place at 10:40. It's currently 3 p.m. and there's no other trade of this after. So this one was not modified. This one was just straight canceled. Let's actually find an example of one that was modified if we can. Give me a second to look around here. Can we poke around? Okay, so that's perfect. So this one was, let me rewind here. So at 2:30:45, this is a multi-leg trade, but don't worry about that. Just think about this particular strikeout only, right? So we have this big 20,000 size trade that was struck out, right? It struck out at 2:30. Shortly thereafter, I think it has to take place within like 30 minutes to an hour or something like that. Didn't it say like timely? Maybe not. But it's within an hour. So you see within 4 minutes in this instance, the same the same uh like fill. So the fill is the same, but the size is different, right? So in this instance, like it was fat fingered incorrectly. It was supposed to be 25. Now you might be asking, oh, like why can't I do that? And like I don't know. I think this is like it's probably just like a pre-negotiated trade or something like that. You can see that the other, which one was this one? This one was the 23.7. You can actually see that the other part of the trade, the 27, was also either canceled or null or modified. Let's take a look here. Yeah, so this one as well. It was supposed to be a 25,000 trade from the get-go, and I guess they gave him a better price in this instance as well. But anyway, it's just something to keep in mind, just that this can happen. We need to do a better job of not rendering the 148%. But yeah, just something to keep in mind. It's tricky, right? There's all these little weird little landmines everywhere. Let's see. Someone's asking, do we have an RVOL type filter? Assuming like relative volume. Let me think. No, that's a good suggestion though, for sure. Someone has shared BDX 220 March. This one is also a clear opener. If I had to guess, this was probably on the scanner that we built earlier, which I can pull up right here. Yep, so BDX, the scanner is nothing fancy. And again, not everything on the scanner is going to be useful to you, but the scanner that I posted is just like a nice little place to start, and I'll post it again. In the URL, it's actually specifically pointing to this day. So if you save this, you're gonna have to change the date. So actually, I'll figure out how to get a better URL to you. But anyways, clear opener, right? 10,000 size trade, 62 open interest, so none to speak of whatsoever. Now, assuming there's no 10,000 size trade between now and the close, you know for certain that they're going to hold overnight, right? It's out of the money, so no one's exercising or being assigned a 220C. It does overlap earnings, right? The expiration is in March and earnings is in February, but like don't really think of it as an earnings trade, I would say, just because it's so far out of the way. But yeah, that one's. Actually, take a look at the tape real quick here if we see anything. Nothing to see here, or no added context rather. Just a singular 10,000 size trade filled at the ask on a wide spread. Yep. Clear opener. Cool. Next, we got the CRH 135C. Suppose it's this one. So again, another clear 10,000 size, 1,000-ish open interest opener with no multi-leg activity. Let's take a look at the tape here. Ooh, so this one has quite a large spread here. So while 195 is technically closer to 360 than it is to 0, it's effectively at the mid because it's so wide. So it is at or closer to the ask, but this one I would just have stayed away from the get-go, just because we want to see stuff. We want to see a tight spread. We want to see stuff that's filling. Like we don't want to see this wide of a spread and the fill coming so close to the mid. So this one probably. It doesn't mean it's a sell, but it's just like there's just no confidence that it's a buy. Is the best way to put it. So it could work out. Who knows? But this is not one that I would take a gander on. Might still work though. Who knows? Could still easily be a buy. Just if there was just zero liquidity in the book, it's possible. It's possible. Let's get rid of some of these tabs here. All right, next, the NAC. Ooh, some of that negative exposure that was there this morning seems to have let up. Stuff right here was kind of all. Oop, wrong button. It's kind of there all day-ish from the get-go, I think. Yeah, I mean, it was just Chop City. Hmm. All right, let's get back to the chat. NAC. Someone has just shouted out the ticker NAC. No added context, but let's take a look. NAC, Northern Dynasty Minerals. So we do see the 3-strike call expiring in Feb has some more volume than open interest. So this one's potentially worth a look. 100K premiums traded, so not the most. Materials, minerals also another just like commodity that's in the headlines a lot lately. I feel like you might need to know something about commodities to really be good at commodity flow. I feel like, and I don't know anything about commodities, unfortunately. But clear opener for certain, right? 2,500 size trade against 2,000 open interest. So an opener for certain. And this thing is up 9% today. Now there was a spike in put premium at the same time, so I guess we could just take a look at that. That one was probably this one right here. So what time was that at? This one was at 12. This one was probably also at 12. Yeah. Yeah, okay. Yeah, all right. This one, don't worry about this one. This one's probably a close. No, it's probably an open, but don't worry about it. NAC, an opener for sure, but that's all I can really say. Next we got the Oracle. The 215 monthlies. Some volume today, not a whole lot to speak of. At no point is there really any clear opener. The volume is greater than the open interest, but the volume is spread out throughout the day in such a way that we cannot see at any point when anything is being opened. So this one is just not really, there's nothing there to look at, unfortunately. We got an X request ONDS, Ondas, the drone thingy, right? I think this one, this 10C March, if my memory serves me correctly, had some shit a long time ago. Was it this one? On September 24th, 28,000 volume. Do we have a big opener? Yeah, so September 24th, there was a pretty big opener at 194, which I thought was a buy, and I guess if they held, they're doing all right. There's been some pretty high volume in this recently. I mean, open interest has gone up about 50%. So, yeah, I mean, this one's pretty hot, I guess. It's been trading, I mean, the net premiums have been pretty favorable in the last 3 days at least, just straight bullish. No puts at all. There's a couple of charts that look like this. Like Walmart, an all-time high yesterday. Walmart's been just straight bullish for a little bit. Someone's requesting GME. Now I'm gonna look at it, but GME, I don't really think there's anything worth looking at here. Not just today, I mean, just in general, really. Now, I guess I shouldn't really say that. Now, if we happen to see, clear openers in huge size, like that's the only time I would really be interested because that's all I'm gonna say. But let's see here. Today we have, I'm just giving it a quick eyeball. Do we have any contracts that I can see at a glance have more volume than open interest in such a way that's kind of interesting? So the 13P next year does have a high volume to open interest ratio. However, 100% of these are traded with another contract. So like, I'm not really that interested in diving through that right now. So at a glance, GME, not much doing today, which is fine. There's plenty of tickers where there's nothing to look at sometimes. Today's premiums. So like the jerkiness of the puts just means that there's like just a couple people trading them, not really a whole lot of people. Calls, no one's really buying. The call premium never really goes up at any point today. Which again, just because the call premium goes down because of bid set activity. The premium line goes up because of ask set activity. Now, just because it's at or closer to the ask doesn't mean it's a buy, right? I'm repeating myself, but it's just that important to keep stressing. Someone's asking about gap. Didn't we go over gap? So the gap, I think we did. Yep. All right, let me just keep going here. It's 320. I want to keep getting to as much stuff here as I can. CVNA. Someone's asking for CVNA. CVNA. Let's take a look. So more volume than open interest on at least a couple on these first two, but nothing really that I want to look at. There's no, there's no skew, heavy skew. I mean, we can look at the charts just to see. So again, there is more volume than open interest, but like the volume is kind of spread out. Even though it's in like this little 30-minute period, it's still spread out to where like you can't really pinpoint where someone might be opening or closing. This one, same thing, honestly. It's just there's not much to look at, which isn't a bad thing, right? Don't get discouraged if there's nothing there for a ticker you like. Sometimes there's just nothing there. And honestly, there's nothing there a lot of the time for a lot of stuff. I know a lot of people are itching. You want to be in a trade. You got that itch, but sometimes there's just nothing there. Someone's asking, how would you go about determining a play on SPY? So, I mean, sometimes there's just straight SPY flow, right? Sometimes the market tide might give you a signal. I'd say today that there wasn't really much of one at all because the premiums, I mean, in the morning it was leaning bearish just by the fact of puts being above the calls. And that's just like a very basic read of no real detail. And then, they're both positive all day. So like that just kind of tells you that there's a lot of indecision in my opinion. Again, not a very sophisticated read, but there wasn't a signal here, right? To go back to the point of sometimes there's not always a signal. Sometimes there's not always a signal. It is what it is. Let's see, someone's asking about Costco. Costco's getting its bell rung today. What's happening with Costco? Spelled it wrong. Cost. Any flow? Are they writing calls? This one, the weekly 900, hard to see. Again, there's 2,700 volume to 255 open interest. However, if you look at the chart, it's just all over the place. Now, when you pull up the Robinhood options tree on your smartphone, you don't see the chart, you don't see the multi-leg percentage, you just see the volume and the open interest, right? So you might be thinking, oh, 900, the Costco 900 weeklies, there's 2,700 volume. That might be something. And I know a lot of people do that, but that's not it. That is not it. Sorry, my internet's tweaking out. Same story, right? 1,800 volume to 400 open interest. So clearly, well, not clearly. I mean, that's just one thing to look for. But then when you look at the chart, it's just all over the place. And to boot, there's 38% multi-leg activity. So it's hard. There's a lot going on. X request JD. I have not seen any JD in a long, long time. The 40 strike January calls that were opened in September, right here, opened at 134 and 182. They could have been closed at some point here. It's hard to, there's just no way to tell because there's so much volume and so much open interest that took place between then and now, right? So early September, on the 8th and the 9th, bigly volume, bigly increases in open interest. 1% multi-leg and 2% multi-leg, so pretty much just straight single leg calls. And they did well for a little bit until they didn't. And kind of going back to the Robinhood contract view, right? When you see 360,000 open interest, that doesn't mean that there's 360,000 people long the contract, right? That just means that there's 360. If you think about like a poly market, yes or no, that just means that there's 360,000 jabronis out there that are betting on this contract, either long or short, right? So open interest is not a bullish signal. Open interest is not a bullish signal. And actually, let's go to the Burlington Coat Factory for a good example of how open interest doesn't really mean much. So the Burlington Coat Factory, if you guys follow me on Twitter, is a I don't know, I don't want to call it a money printer, but I think that's what we got to call it. There is someone or a couple people. I think it's just one fucking person. There's someone who is always shorting puts, and they've been doing it literally for a year and a half now. I've been posting about it on Twitter all the time. So again, back to the open interest, right? So Burlington, the highest open interest contracts are all puts, right? The stock's trading at 255. We have all these puts here, but these are all short puts. These are all short puts. Every freaking Burlington put that's been traded in the last year and a half that has any size has been a short put. If you go back, you can see that they're all open at the bid. They're all single leg. They're all huge premiums. This guy just doesn't miss. This guy just doesn't miss. Let's zoom out here. So this one, 1.8 million in premiums, 480 average fill. They're trading for under 38 cents today. This one was from last week. I mean, like they have like 10 different positions. It's crazy. I don't know. Now, what is the saying? Past performance is no guarantee of future success. Yada yada. So don't bet the house on it. But this guy or gal is a fucking sniper. I think I've literally tracked 15 to 20 of their positions, and they've lost one, maybe. And if they lose, they don't even really lose because like they get assigned shares, and then they're so fucking rich that like they just hold them, and then they just ride the bounce back. So like, I don't know, it's insane. Let's get back to the chat here. We got a few minutes. We're ticking down. Nvidia. Don't think I saw much Nvidia today. What do the net premiums look like? I haven't even looked at Nvidia's chart once today, I don't think. What is it looking like? So it's up, and the premiums are just nothing to really see at a glance, right? The premiums are both positive, which, again, a very low-level read is that, you know, people are buying calls and they're buying puts. So, you know, there's no signal. I guess you could say it's getting a little bit bearish potentially, especially in the last since whatever time that is, 250. And I'm only saying that because the put premium is increasing while the call premium is decreasing. I haven't actually looked at the contracts. I always tell people, you know, the net premium chart is useful, but as I did with, what ticker was that? As I did with HIMS, you always want to go back to find out why the net premium ripped. Why did the net premium increase by 1.3 million on December 3rd? December 3rd, so the premium jumped because of the 41C on March, or expiring in March. That was a single leg trade, right? So this is an identifiable position that caused an increase in open interest, or an increase in net premium rather. That also increased the open interest. But you know, I'm tying the net premium chart back to a specific contract, which is what you really want to do. You know, I'm sure there's plenty of net premium charts that just look bullish at face value. Let's see if I just click around if I can find one. Right. So I mean, like Tesla looks bullish at face value. Do we see, you know, if I plug in some basic filters, do we see any actually kind of bullish looking Tesla stuff? Let's see here. I mean, I guess. Oops, I'm looking at the wrong day. So I mean, the 500C. So this contract is responsible for some of the bumps in net premium because it's, you know, predominantly at the ask, but there's no real standout jumps, right? So it's hard to nail down contracts that are causing any real movement. Now, I mean, this one was 1.6 million in premium, so this one that took place at like 10 in the morning was responsible for something or other here, right? But this one's just a lot less clear. You know, stuff like Tesla and Nvidia, it's the mega caps. I think the flow in the mega caps is like pretty hard. You know, there was those Apple calls from a couple days ago that aren't doing too hot. You know, I think people are better off looking for like the small, the schmid, the mid cap flows, in my opinion. All right, it's 329. Let me scroll the chat here. All right, I've pretty much caught. Let's look at the last one. We got the HE, the Hawaiian Electric. What is the 15C 115? What's going on here? All right, so the HE15C, we have 34,000 contracts traded against 700 open interest. So clear openers. Big multi-leg percentage, which probably is attached. So if I just, if I look here, I can see, okay, there's two big candles that are causing two big spikes in premium that are coincidentally also taking place with a decrease in put. So we're going to see probably a similarly sized, maybe even the same exact size bid side put being opened. Let's take a look here. And lo and behold, we have a large bid side put being opened as well. Same size. You're going to see the open interest is going to be 34,000 on both. Actually, we'll say 32 at least 32. Actually, 30, 27, 23. No, it's going to be like 33. So anyways, look for contracts, right? So we saw the net premium. If you just happen to see this, you can see, the 15C and the 10P are causing this. Now that doesn't, just because this is filling at the ask and the 10P is filling at the bid, that doesn't necessarily mean that they're opening a risk reversal. What was the 10P moving for? The 10P was for 93. This was for 108. So the difference is what, 15? No, it's 15 cents, right? Yeah, 15. So they're paying 15 cents, presumably, right? If it's a buy call short put, then they're paying 15 cents to open the trade. And obviously unlimited gain potential, and the max loss is 1,000 per contract. How do I know it's 1,000? Because to be assigned a 10P would cost you $1,000. But this trader has 33,000 of them, so their risk is much more than that potentially. If it's a short put position, we don't know. This company was under some serious shit because I think people thought that they were the reason why Hawaii went up in flames not that long ago. Was that a split or was that it? Let me Google this on my other monitor here. Hawaii fire. Was it in August of 2023? It sure was. Yeah, so I guess maybe this company was responsible because it lost like all of its value. Yeah. RIP. All right. That's it for me. If you guys are regulars, I appreciate you coming back. If you guys are first timers, thank you so much for showing up. I usually do this on Thursdays. Nick does his stuff. Freaking, I can't even keep track. He does it all the time now. But
every Monday and Wednesday at Market Open, homies.
All right, yeah, there you go. Monday, Wednesday. Yep. I'll see you guys next time. See ya.